Hey, what's up everybody? This is Jessie with Minimalist Accounting and I have an awesome video for you guys today on the statement of cash flows. We will begin by looking at the important basics, followed by if, the three categories of cash flow statement, which are operating, investing, and financing activities. We will then look at the direct and indirect method, either of which can be used to present this information, and finally, we will wrap it up with an example. First, the basics. The purpose of this statement is to show a company's ability to generate cash and cash equivalents. Cash would include things like coins, currency, and other foreign currency. And cash equivalents are any short-term, highly liquid investments which can easily be converted and whose original maturity is 3 months or less. Some examples that you are likely to see are treasury bills, money market funds, and commercial paper. The statement is reported for a period of time. Now, there are three categories in the cash flow statement: operating, investing, and financing activities. So the basic idea behind this is that if cash was received, aka there is cash inflow, you will add that to your beginning balance. And if cash was paid, aka there was cash outflow, you're going to subtract that amount. Pretty straightforward, right? Let's look at what falls under each of these three categories. Operating activities would include all the elements of the income statement. So for example, dividend income, interest expense, income tax expense, etc. When presenting this information under the indirect method, we reconcile the accrual net income to cash basis net income. So this means that we would add any increases in change of liabilities and subtract any increase in change of assets from the net income. To know more about the reconciliation process, check out my video on reconciliation of net income, which will also be linked in the description box below. In addition, we will also add back any depreciation, depletion, and amortization expense to our net income because these are non-cash expenses. In other words, all of these are expenses and were initially subtracted to give us our net income. We did not actually spend any cash. Finally, we will add back any losses and subtract out any gains for the same reason. Next, let's look at what falls under the investing category. It includes items related to acquisition and disposal of long-term assets and investments, so purchase and sale of other productive assets, for example, patents, equipment, but not inventory. Inventory falls under operating, and disposal or investment in debt or equity securities, and making or collecting loans, to name a few. Next, financing activities. It includes items related to the liabilities and owner's equity sections of the balance sheet. A few noteworthy examples of financing activities are sale or purchase of owned stock, proceeds from borrowing, making principal payments, and payment of dividends. Cash flow from operations can be presented in one of two ways: the direct method and the indirect method. Let's look at the direct method first. The direct method directly shows the amount of cash inflows and outflows from operations. The operating activities section is the only section that differs between the two different methods. Let me show you the format for the direct method. You have the name of the company, followed by cash flow statement title, and the period for which this information is being presented for. You will simply include all the cash inflows and outflows from operating activities, those from investing activities, from financing activities, and also effect of foreign currency translation. We will then net this increase or decrease in cash and add it to our beginning cash balance to give us our end cash balance. In the indirect method, like I mentioned, the only difference is with how the operating activities section is presented. In this method, There is a reconciliation of the accrual-based net income to derive cash flow from operations. Again, the same three-tier title applies. But now in our operating activities section, rather than just having cash inflows and outflows, we're going to begin with net income and make any adjustments to reconcile that accrual net income to cash net income. That will give us our net cash provided by or used in operating activities, and the rest follows the same as we saw in the direct method in the previous slide. So you would have investing activities followed by financing activities and the effect of foreign currency translation adjustments. Here's an example of Amazon's cash flow statement using the indirect method. As you can see, they have their titles, which is the name of the company, title, statement of cash flows, and the period for which this information is being represented for. They have listed their beginning balance. Then the first section is the operating activities. Now this is indirect method, so they are going to use reconciliation. They begin with net income and make any adjustments necessary to give us our net cash provided by or used in operating activities. Next follows the investing activities, and this includes elements of long-term assets and investments. So as you can see, you have property and equipment, more property and equipment, you have some acquisitions, you have sales and maturities of marketable securities, which falls under investments, and purchases of marketable securities. This gives us our net cash provided by or used in investing activities. Finally, we have the financing activities, which includes elements of liabilities and equity. So as you can see, proceeds from long-term debt, repayments of long-term debt, principal repayments, more repayments. So it looks like they mostly have liabilities listed down here in this section, giving us their net cash provided by or used in financing activities. Finally, they have their effect of foreign currency translations listed to give us our net increase or decrease in cash, and when added to the beginning balance above, it gives us our ending balance. In conclusion, remember that this statement lists or shows a company's ability to generate cash. Now this includes cash, cash equivalents, and restricted cash. In the indirect method, the only difference from the direct method is in its operating activities section, which involves a reconciliation of accrual net income to cash net income. And finally, here are the three different categories and the elements that fall under each. That's it, folks. Thanks for watching, and I'll see you in the next video. Till then, happy counting!